flow that came overnight.
Okay, lots of stocks to talk about, but before anything, let's also get a quick handle on what's happening across the globe. Arvind Sanger, Managing Partner, Geosphere Capital Management, is joining in. Arvind, good morning. Lot of news flow, right? But the narrative seems to be that the rate tightening cycle is coming to an end. Whether the growth fears will recede or not, time will tell. But how are you looking into all of this? What should the strategy be now as we head into the second half of the year?
Well, so two different things. One is, and you touched on both. One is that the headwind to investors in terms of rising rates is, at least for the Fed, maybe close to an end. That may not be the case for ECB. It may go a little bit longer, but Fed may be close to an end. So I think in that sense, that risk-off, sentiment and the attractiveness of investing in fixed income relative to taking the risk of investing in equities, that when you can get 4+% in government bond yields and the high quality bonds, that headwind may be coming to an end for equity investors. But the new headwind that we have to worry about for at least those markets that are going to potentially see a recession, which the U.S. is, prime candidate number one for a risk of a recession, then that becomes the issue, that what's going to happen to earnings. So putting India in context, the headwind of rising rates was causing, fund flows to be negative. But India's own earnings growth and economic growth is not on the same shaky wicket that the U.S. economy is. So I think in that sense, that would be a positive for Indian equities.
All right. Hi, Arvind. Good morning. Arvind, the last time you joined us, close to 20, 25 days or so ago, and we were asking you, what about the downside for the Indian markets? Whether it could be 5 to 10%. Surprise, surprise, from then we're up close to around 5% odd. And you were saying that we don't have a banking problem out here, so maybe you'll be incremental positive. What's your view now post this 5% rally? Do you continue to maintain your positive stance? And what else are you looking at from the Indian markets?
Yes, we are remaining positive. We are looking for the upcoming earnings season to give us more confidence that the earnings story in India is on track. And we're looking for cues from a lot of the domestic-facing industries. Luckily, one of the things that we were concerned about, the weather has not been as hot as last year. So the energy crisis in terms of power shortages has not been as acute. That is one potential headwind for the economy that hopefully will not play out in the remaining part of summer. But it's something to keep an eye on as a modest near-term headwind. It's not a structural headwind; it's a modest near-term headwind. But other than that, inflation is important. I think inflation seems to be contained. Although the one negative, obviously, is that OPEC cut its output announced a few weeks ago, and that does create a little bit of a headwind from an oil price rally. But I think that overall, this quarter should show that earnings strength in Indian, corporate India is very much on track. And if that continues to be the case, then I think whether it's the financials, which are the lead sector, or it is important domestic-facing sectors, I think they should start to become clear that the earnings story is very much on track.
Arvind, between India and China, is China still favored versus India, or do you think the relative valuations now, the difference between the two is not very significant? Now investors are viewing both of them equally, India and China?
I think the China bounce really started in October last year and really ended, in my opinion, in terms of the significant bounce, soon after Chinese New Year. So in my opinion, the China story is at this point on its own merits. India is on its own merit, and the China story continues to see headwinds. I mean, they have arrested or made disappear the leading investment banker in China. There's a lot of anti-corruption moves against leading lights in the financial services industry, banking, investment banking, what have you. I don't think China is making itself as a safe place where people feel comfortable investing without knowing which policy, initiative would cause which sector to come under pressure. We've seen that over the years, whether it was technology, it was gaming, it was, online gaming, and it was a lot of other sectors, real estate. There's been a lot of that damage done. So I don't think at this point with the rebound, Chinese valuations are significantly lower than India's, but I think they deserve to be. So I don't think India at this point will be impacted with China fund flows back to a significant extent.
Okay, Arvind, one last question before we let you go. So in the next couple of days, we're only going to be talking about the technology companies, right? And this is important because we might get a first indication of what FY24 could look like, with Infosys perhaps giving out a guidance as well. What side of the fence are you on? Are you buying or are you avoiding IT stocks?
I think that the IT stocks, the concerns about the banking sector crisis are overdone. I think the concerns about the recession in the US still remain and the effect, but I think that IT stocks at this point, in my opinion, are pretty well discounting a lot of the bad news. So I would say that on the balance, since I'm also a little bit bearish on the dollar, I think IT stocks on balance look to us to be reasonably priced. And I think that the earnings outlook will be relatively supportive of equities in the IT sector.
Oh, okay, that's interesting. Thanks a lot, Arvind, for joining in and giving us a quick take on what to expect over the next couple of weeks and months in the global and local markets. Appreciate your thoughts. We'll slip into a quick break. Lots of stocks to focus on this morning. Kotak Mahindra Bank could top the charts as well. More on that in a bit. Stay with us.